Yo, what is going on YouTube? It's your boy Carlos Hernandez, aka your favorite YouTuber, and we're back again with another YouTube video for you guys. I hope you guys liked it because what's been in the news today, like literally what just happened today, was, if you guys didn't know, was the congressional hearing for the GameStop stuff that happened, the GameStop saga, whatever you want to call it. It's probably going to be the first of many, and if you guys didn't watch it, you know, it's just a bunch of BS. And they didn't really tell much, to be honest, because that's what they do. They lie and whatever. I'm not gonna get into that. But it's Keith's testimony, the guy right behind me, DEEPFUCKINGVALUE, this guy right here. It's his testimony. It's literally 5 pages. I'm gonna be reading out, and if this is not your type of video, then go ahead. You don't have to watch this video. You can pass on. But it's really interesting what's in his thing, and it just sheds a light of who this guy is. And the testimony that he did give out gives you a more insightful view of that all of this wasn't his fault, and it just gives you an insight on his life and what he's done, his career and stuff. And it's really not something that you would expect from somebody who literally has made like millions off GameStop. You know, this guy will go down as a legend. This is history. His testimony will ever go down in history. You know, we like the stock.
We like the stock. We like the stock.
He even hits you with the meme and the testimony, which is crazy because this is like in front of like the actual government. But yeah, that's what this video is going to be about. This is just me reading it, and if you guys are interested in that, then stick along because we're just going to head over to me reading that. So if you guys are interested, stick around. Please make sure you like and subscribe. It really helps out my channel a lot. I love you guys. Thank you guys, and we'll move on to the next thing.
Here we go!
The testimony of Keith Patrick Gill, aka RoaringKitty, aka the guy who led the whole GameStop movement, the guy who was one of the first people to short, if not, no, he wasn't the first, but he was definitely one of the first people to make it publicly known that GameStop had more than 100% short interest on the stock. And yeah, I mean, he basically made it famous, and a lot of people followed. So I'm just going to be reading the testimony that he gave to the U.S. House Committee. It's 5 pages. It's not extremely long. And what you guys can do, if you guys don't want to hear me read it, I'll put a link in my description so you guys can definitely go out and check this out. I definitely recommend you guys watch this whole video. If not, you can speed it up just to make my talking a little bit faster. And if you don't want to hear my voice reading it, you can definitely just click the link in my description. I'll put the link so you guys can go ahead and read it. And I definitely recommend, like I said, to read it. Thank you, Chairwoman Waters, Ranking Member McHenry, and members of the committee. Before I go further, I want to be clear about what I am not. I am not a hedge fund. I do not have clients, and I do not provide personalized investment advice for fees or commissions. I am an individual investor. My investment in GameStop and my posts on social media were entirely my own. I did not solicit anyone to buy or sell stock for my own profit. I did not belong to groups trying to create movements in the stock price. I never had a financial relationship with any hedge fund. I had no information about GameStop except what was public. I did not know any people inside the company, and I never spoke to any insider. As an individual investor, I use publicly available information to study the market and the value of specific companies. I consider a complex array of factors and track hundreds of stocks, all in search of market inefficiencies. Like many people, sometimes I post on social media my thoughts and analysis about individual stocks, whether they are correctly valued. I did that with GameStop. I believe the company was dramatically undervalued by the market. The prevailing analysis about GameStop's impending doom was simply wrong. A little about my background. I grew up in Brockton, Massachusetts. My father was a truck driver and my mom a registered nurse. I was one of 3 kids and the first in my family to earn a 4-year college degree when I graduated from Stonehill College in 2009, amid the Great Recession and without a long-term job. My first post-college job was in operations at WB Mason, an office supply company headquartered in my own hometown of Brockton. Between 2010 and 2014, I worked for a family friend at a startup company in New Hampshire, trying to build a software program that would help investors analyze stocks and offer related research. We also tried to start an investment firm which dissolved not long after it was created. My salary never exceeded $40,000, but I did learn something about investing. I learned how to do the tedious work of digging through a company's financials and focusing on its real long-term value, not prevailing market sentiment or headlines. I married my wife Caroline in 2016, and I found a job working operations and compliance at Lex Shares. I left that job in March 2017, and for the next 2 years I was effectively without a job. During that time, I began actively analyzing a wide array of stocks to try to keep and increase our limited savings. It was both a way to make money and an interest that I had pursued passionately while I lacked a job. In April 2019, I accepted a marketing and financial education job at Mass Mutual. Caroline and I were both happy about our prospects. I had never made a salary over $100,000 a year before, and I was thrilled just to be working and to have benefits again. My title was Director, Financial Wellness Education. My job was to help develop financial education classes that advisors could present to prospective clients. I never sold securities, and I was not a financial advisor. I continued analyzing stocks on my own time and investing my family's funds. In early June of 2019, the price of GameStop stock declined on worse than expected earnings, and it began trading at a deep discount, below what I thought was its fair value. I was aware from public reports that a well-known investor, Michael Burry, was interested in GameStop. Because I thought the stock was undervalued, I purchased all call options on June 7, 2019. I increased my position throughout much of 2019 and 2020 because as I continued to analyze the company and its prospects, I became increasingly confident that the share price was indeed dramatically undervalued. Two important factors based entirely on publicly available information gave me and many others confidence that GameStop was undervalued in 2019 and 2020. First, the market was underestimating the prospects of GameStop's legacy business and overestimating the likelihood of its going bankrupt. GameStop, the only major retailer dedicated to gaming, has over 60 million members in its loyalty program and continues to maintain a sizable market share within the gaming industry. Its legacy business, comprised primarily of selling physical video games and related equipment within their stores, was likely to generate meaningful cash flow following the release of new gaming consoles in late 2020. I grew up playing video games and shopping at GameStop, and I'm looking forward to buying a new console at GameStop. I knew the company had an opportunity to reinvigorate this business by improving customer service for gamers, upgrading its online presence, and offering complementary product lines such as PC gaming and accessories. Second, I believed, and I continue to believe, that GameStop has the potential to reinvent itself as the ultimate destination for gamers within the thriving $200 billion gaming industry. The new console cycle provides GameStop a unique opportunity to pivot from a traditionally brick-and-mortar mindset toward a technology-driven business that excels in gaming products, experiences, and services. By embracing the digital economy, GameStop can pursue new revenue streams including larger gaming catalogs, digital content and community experiences, online trade-ins, streaming services, and esports. While I may be the only panelist here today who had faith in GameStop, I was hardly the only person who advocated these points or ones like them. Investors including Chewy co-founder Ryan Cohen, whose purchase of GameStop shares and advocacy with the GameStop board helped positively affect the price in late 2020, publicly expressed similar views. I want to pause to note that the investment I made was risky, but I was confident in my analysis and I was willing to accept a loss if I was proven wrong. My timing was far from perfect, and many of the options contracts I purchased expired worthless because GameStop's stock remained depressed longer than I expected. I've been asked why I decided to share my investment ideas on social media. My investment skills had reached a level where I felt like sharing them publicly and could help others. I also thought by sharing my own ideas and accepting critiques, I would be able to identify the holes in my analysis. Hedge funds and other Wall Street firms have teams of analysts working together to compile research and critique investment ideas, while individual investors have not had that advantage. Social media platforms like YouTube, Twitter, and WallStreetBets on Reddit are leveling the playing field. And in a year of quarantines and COVID, engaging with other investors on social media was a safe way to socialize. We had fun. The idea that I used social media to promote GameStop stock to unwitting investors is preposterous. I was abundantly clear that my channel was for educational purposes only, and that my aggressive style of investing was unlikely to be suitable for most folks checking out the channel. Whether other individual investors bought the stock was irrelevant to my thesis. My focus was on the fundamentals of the business. It's worth noting that after 5 months of streaming, my final stream of 2020 topped out at just 96 concurrent views, with an average view duration of 25 minutes. On Christmas morning, I had only 529 subscribers on YouTube and 550 followers on Twitter. These numbers are tiny, There were rarely more than a few dozen folks on the stream at any night. The reality was people didn't care about boring repetitive analysis of GameStop and other stocks, and that was fine. For those of us who did care, the stream provided us an outlet for refining our fundamental base thesis. We were able to analyze events in real time and keep each other honest. Ultimately, my GameStop investment was a success, but the thing is, I felt that way in December far before the peak, when the stock was at $20 a share. I was so happy to visit my family in Brockton for the holidays and give them the great news we were millionaires. That money will go such a long way for my family. We had an incredibly difficult 2020. In addition to dealing with COVID, we lost my sister Sarah unexpectedly in June. It brought me tremendous joy to share good news with my family for a change. I am grateful to be able to give back to my community and to support my family. Most of all, my wife Caroline, who has stuck with me through very tough times. As for what happened in January, others will have to explain it. Threshold lists, order flow, halting purchases, according to the media, these all had material impact on GameStop stock in January. Here's the thing. I've had a bit of experience and even I barely understand these matters. It's alarming how little we know about the inner workings of the market, and I am thankful that this committee is examining what has happened. I believe an analysis of GameStop's recent price action must start with a discussion of the exorbitant short interest in the stock, as well as an investigation into any potential manipulation shorting practices and brokers' reported failures to timely deliver shares and settle trades. As for what I expect moving forward, GameStop's stock price may have gotten a bit ahead of itself last month, but I'm as bullish as I've ever been on a potential turnaround. In short, I like the stock.
We like the stock. We like the stock.
And what's stunning is that, as far as I can tell, the market remains oblivious to GameStop's unique opportunity within the gaming industry.
Perfect.
Alright, so that was it. That was 5 pages of Keith Deep F and Values testimony. Pretty insane. This guy, like I said in the beginning, this guy's literally such a legend. He's made millions, and coming from humble, very, very humble beginnings, which I can relate to as well. Like, this guy changed this generational wealth. Like, he changed his life, he changed his family's life, and good for him, man. Really good for him. I don't think anyone in the community that isn't associated with like any hedge funds or any of those people can be mad at this guy and what he's achieved, and there's just no hate. Like, it's all love for this guy. Like, this guy is super awesome. I mean, he's wearing a freaking headband. I mean, his name's RoaringKitty on YouTube. I mean, there's what's not to like about this guy. I just wish this guy doesn't like have any huge fines or anything like that, but those are things that we're gonna come to see in the future and whatever. But, you know, I hope that was a cool video. I've never done a video like that where I just read some things to you guys. But I hope you guys enjoyed that video. I'll catch you guys on the next one. Hope you guys enjoy the rest of your day, night, wherever you are, and peace.
Hold up.
Guys, if you don't know, WeBull will be giving you 2 free stocks when you sign up and deposit your first $100.
Perfect.
With any of these stocks being valued up to $1,400. If you're not signed up already, make sure to use my link down in the description. Also, you'll get $10 worth of Bitcoin on Coinbase when you buy or sell your first $100 worth of Bitcoin. Link is also down in the description.